Hey friends, I'm back. I want to discuss the very popular ETF SCHD in the video today. This is a dividend growth ETF that I own. They just increased the dividend by 3.5%, but that's looking quarter over quarter, year over year. If I actually sum up the last four distributions, we're up 5.8% year over year, which is pretty reasonable dividend growth given the underlying companies that the ETF owns right now. I'm a dividend investor who likes to buy the highest quality ETFs and stocks. My overall portfolio yield average, the current yield, is about 3.7%, which is not so dissimilar from SCHD's starting distribution yield of about 3.8%. Those are ranges that are working for me given my level of risk tolerance. Right now, I'm about 6 years away from my cash flow goals from passive income. But if I took all my money and I just put it into higher yielding stocks and ETFs, I would be at my goals right now. But because of my strategy, I'm taking things a little slower and I'm investing in ETFs like SCHD because they work for my level of risk tolerance. And so I'm a long-term value investor, a yield on cost investor. I want to share in front of you right now, as you can see, this is just the data from the SCHD website. You can see from their website in front of you that the ex-dividend date of 9/24/25, which was yesterday, the payable date of 9/29/25, that first row in the table, they're going to be paying out 26.04 cents. And so this is as compared to 25.15 cents in the year before, which is a 3.5% increase year over year. But the story is more complex than that. And we can't just look at the last quarter. And that's what I want to share with all of you in the video today. As you can see on the screen in front of you right now, this is my analysis. There's a lot of data here. I don't want to scare you. We're going to go through it. So don't worry. Check out the data on the left-hand side of the screen. Let's start with that. What I do is I break down all the distributions in chunks of 4 and I sum them up so we can look at years over time. This is all pulled directly from the SCHD website. The only thing I changed is I had to split adjust a bunch of data, and that was the data starting 9/30/24 and before. And the reason for that is they did a 3-for-1 split on 10/10/24. What does this 3-for-1 split mean? It actually means not much. You had 1 share before the split, 3 after, but the 3 after were each worth 1/3 of the original share. So there's no net new value creation, but what the split did is it made SCHD more accessible to more investors, which is pretty cool because we want to encourage in the dividend investing community, the ETF community, accessibility to everyone because dividend stock investing is for everyone. So I like that Charles Schwab did that. But as you can see on the screen in front of you right now, I have a column there. The most important column on the left-hand side of the screen is basically the one that just says amount post 3-for-1 split. You see the distributions over time, and let's just see, how does it look year over year? Well, we know that the dividend distribution from 9/24/25, it's up 3.5% year over year. When we sum up the last 4, as I already said, we're up 5.8% year over year. How do I know that? Well, I look at the annual subtotal. The annual subtotal from the last 4 is 1.03 and change, and I compare that to the annual subtotal in the block of 4 below that, which was 0.977 and change, and it's up 5.8%. So first and foremost, I want to share that year over year, I'm looking at the growth at 5.8%, and that's a number that's really important to me, and it should probably be important to all of you at home as well. First and foremost, it's important because if you've been around since the early days of PPCE and when I did these videos in my backyard, please put in the comments below if you were. I used to share that my magic number is 7%. I like to see dividends growing 7% or more over time. It's really hard to hit that consistently these days because that's the magic number to get to financial independence, retire early quicker. But 5.8%, it's pretty close. I'll take it. 3.5% is not good enough. Thankfully, I think that this 5.8%, they will probably maintain this, if not do better. And that's why I want to share the data. Check it out on the screen. If we look at the left-hand side of the screen, you can see that over the years, I have a bunch of comparables. But last year, versus the year before, they grew the dividend distribution 11.9% year over year. Then the prior year, versus the year before, it was only 5.7%. So you can see it jumps around a bit. When I'm comparing the year of 9/25/24, the X date, kind of the one that starts with that, versus the year that has the 9/20/23 X date, you're seeing 11.9% growth, which is huge. But if you compare the 9/20/23 X date year versus the 9/21/22 X date year, you're seeing 5.7% growth, which is very similar to the 5.8% we're seeing right now. Year before, 11.1% growth year over year. A year before that was pretty staggering. It was 17.9% year over year. Now, the 5-year average, the compound annual growth rate over all of this time has been 10.38% per year. Look, I knew when I got into this investment that holding up a dividend CAGR of 10% or higher is unlikely, but my thesis was that over the long term, it could do 7% or more. Now, this last year has been a little lackluster at only 5.8%, but the data clearly shows that over time, it can jump around. And that makes sense because business growth, it's not linear. The underlying composition of the ETF can change over time. There's 100 positions. It gets reconstituted annually. It gets rebalanced quarterly also. And so things change over time. And some years are going to be better than others. But we know over the last 5 years, on average, it's been growing by 10% plus per year on average. Now, again, I'm looking more for 7% or more, so I'm having realistic expectations with this ETF over time. But I want to share something else. As you can see on the screen, one last thing I just want to share is I think it's kind of hard to look at quarterly distributions for this thing because this quarter we're up 3.5% year over year. But going back to the top of the screen on the left, if you look at the X date from 6/25/25 compared to 6/26/24, it's only up, actually it was down 5.3%. So it's shrinking year over year. Now, the quarter before that with the X date 3/26/25 was up 22.2% year over year. The one before that, 6.9, it all averages out to 5.8%. You can see that the growth, it's quite volatile by quarter. And so the key takeaway I want to share in the video today is I think it's hard for any of us to analyze SCHD's quarterly distributions over time, year over year, because they can fluctuate a bit. But annually, I think those blocks make more sense. But even annually, we see that it can fluctuate a lot, and they're at 5.8% right now. Now, I mentioned that 5.8%. It's important for two reasons. The first reason it's so important to me is, like I said, 7% is kind of my magic number. And I went into this investment because I wanted to beat my portfolio average. And so that's really the second reason. As you can see on the screen in front of you right now, we're going to move to the right-hand side of the screen. So you can see on the right-hand side of the screen, towards the bottom, I have something called comparison to my portfolio average. And that's from my 6/25/25 update. Corner patrons, I'm going to link to my Patreon in the pinned comment below. I'm working on my next portfolio update right now. But you can see my current yield, it's not so dissimilar from SCHD. It's 3.71%. It's a reflection of my risk tolerance. And SCHD actually has a higher starting yield of 3.83%. So it's 12 basis points higher. But you can see my portfolio dividend CAGR. This is not including net new contributions. This is not including reinvestment. I'm just looking CAGR of all of my stocks that I own, including SCHD, which is an ETF weighted by their value in the portfolio. I'm getting about 5.27% growth per year on average over time, CAGR portfolio average. Here, this is where things get really interesting, and one of the reasons I did the video today. 5.27% in my portfolio on average versus 5.8%, what we're seeing from SCHD in the most recent year-over-year comparison. Here's where things will get interesting going forward. I bought this stock. Well, I bought it for a few reasons, to diversify, and it does. I only have about 30% overlap with my portfolio, which is great. So 70% are net new stocks that I don't have in my portfolio, and that's held up over time over the years. But the other reasons I bought it is I thought SCHD, based on the CAGR history, would have superior dividend growth to my portfolio. And look, 5.8% is superior to my portfolio's kind of 5.2 when I weight by value. But we're kind of in a similar range here. 5.8% is a lot different than 10+% CAGR. And so what I'm going to be looking at going forward with SCHD is, can they hold that 5%, that 5.8%, or do even better? Can they get around 7% CAGR per year or better over time? That continues to be my thesis and is one of the main reasons I am building SCHD to one of the larger, if not the largest single position in my portfolio, because of the diversification, but the belief that the algorithm can outperform over time from a dividend CAGR perspective. Now, with an ETF versus individual stocks, it's more difficult to buy value. I like to buy stocks and ETFs when they're on sale. An ETF goes on sale when the market's crashing. Individual stocks, because I own a lot of them, any one of them can be on sale at any given time, and I can just pick and choose the ones that are on sale. So that's a whole nother factor, and it plays into my portfolio total returns. But what I want to share in the video today is, hey, I'm still very bullish on SCHD. It's still core to my strategy. Look, even if it matches my overall returns, that basically shows me that my active management is pretty darn good. But I want to see, can this passive management beat me? Can it beat me? And I think it will, because over the last 5 years, in terms of a CAGR basis, it certainly has. But year over year, it's not. So let's see what the next reconstitution holds, and let's see where it goes from here. Put in the comments below what you think about the dividend growth history of SCHD. Now, before I go on to the next topic, check it out on the screen, take a look. So I have on the right-hand side of the screen just some other statistics. Let's start at the top of the right screen. I have the price per unit right now, 26.99. I bought more today. I like to play this, what I call a game within the game. And one game I had in my portfolio was, hey, Ian, if it hits below 27 again, buy more. And I did. I bought more today. Patrons, I owe you an update. I'll be doing that. My backyard and corner patrons on that trade quite soon here. We're down about 9% from the 52-week high. Starting yields 3.83%. CAGR for the last 5 years is 10.38%, and the market cap is 72.58 billion. So this is a big ETF. Now, I show the top holdings there. I put an X next to the ones that overlap with my portfolio, which are ABBV, Chevron, Home Depot, Altria, and Coca-Cola. What's interesting that I've always seen with this ETF is I do have some overlap in the top 10, but as you get into the long tail of positions that SCHD holds, I have less and less overlap. And the average overlap over time with my portfolio has been around only 30%, which I can deal with. And so I also have at the bottom right of the screen some stats on my portfolio. And again, I'm sharing my starting yield and the CAGR of the underlying stocks in my portfolio. Now, with my portfolio, the dividend income, it's actually growing by about 10% year over year. And the reason for that is not only the underlying companies are growing the dividend, but I'm doing dividend reinvestment and I'm deploying net new capital. And so that's the really big news right now with SCHD. But I actually have some more big news. And so I have some Thug Life news for all of you today as well. Many of you know I own Philip Morris. I own all of the SIN stocks, but Philip Morris is one that's been growing really quickly lately. As you can see on the screen, check it out. They just increased the dividend by a huge, staggering 8.9%. And so that was really big news for Philip Morris shareholders like myself. They haven't been growing the dividend linearly over time. This is a bigger increase. But what's great is I take that new 5.88 per share, and I divide by my original tranche from 2029, which was $38.39. And I'm getting a simple yield on cost, not even including reinvested dividends of 15.3%. And so that is the power of long-term dividend growth investing. And it's another example. It's kind of a timely example because sometimes I wonder, would have I been better off putting all my money in these SIN stocks? Probably. Would I be at my goals right now if I did that? Yes. But I have to weigh that with risk and my risk tolerance and my need to sleep well at night. And I probably would not sleep well at night knowing all of my money were in just a basket of stocks in the SIN stock industry. But I am very thankful and happy to hold them because they have boosted my portfolio's yields and total returns. Now, I want to close out today for all of you. I have some really exciting updates. First and foremost, I'm back home. I spoke in Toronto at Blossom Investor Tour Toronto. It went really well. It was so much fun. I would say for myself, it was a very special experience, a kind of a life-changing, if you will, experience. I was there with 1,400 different investors at Rogers Center where the Toronto Blue Jays play. I got to speak about dividend investing. I got to meet a lot of subscribers, a lot of content creators as well. And so I might do just a fun thing in the videos over time is just share like, who did I meet at this event? And so one of the people I met for the first time at this event was Adrian. He's from Canadian in a T-shirt. He's one of the very successful and big YouTubers. He's someone who's always positive, always has a smile on his face. This is the first time I got to meet Adrian in person at this event. So shout out. I'll include a link to his channel in the pinned comment below. And also I got to meet my friend, or both of my friends, Brandon and Marc Beavis for the first time, who are long-term supporters and friends of PPCE. And it was a very special moment to meet both of them. And so shout out. I will link in the pinned comment below to Brandon Beavis, Marc Beavis, their channel. And Brandon is the co-founder of Blossom. So in some of the future videos here, I might just share some more tidbits from my experience and some photos and some links in the pinned comment below. But based on feedback from the community, I'm going to put this at the end of the video after the main content, just to keep mindful of everyone's time. Also, what I want to do though is I want to share, if you are watching from Chicago, I want to meet you. I'm going to be there in Chicago on October 7th. And so I'll include a link in the pinned comment below, but I will be speaking at Blossom Investor Tour Chicago. Please come. I have a discount code there for 15% off, and the tickets only cost $27.50 before discount, and that includes your admission, it includes the venue, it includes a t-shirt, food, drinks. And so don't miss out. I want to meet you if you're in Chicago. I can't wait. I think it's going to be another life-changing experience like the Toronto event. It's going to be amazing, and it's going to be at CBOE, Chicago Board Options Exchange, a really special and historic and important network and exchange within the history of Chicago. So it's going to be really fun. Also, if you do sign up for all of that, please DM me on one of the social media platforms, because I'm going to also have a little fun PPCE and meetup at Starbucks Reserve, which is the largest Starbucks, I believe, in the world. And also another shout out I'll include in the pinned comment below, but Russ from Dapper Dividends, he's going to be presenting with me there in Chicago. And so you can meet us both. It'll be a lot of fun, and I hope to see you there. All right, everyone. In terms of full disclosure, I own the stocks mentioned today. In terms of full disclosure, I'm long Starbucks, ticker SBUX. I'm long the ETF SCHD. Also, I am long Philip Morris, ticker PM. Also, I am long the stocks ABBV, ticker ABBV, Chevron, CVX. I'm long Home Depot, HD, Altria, MO, and Coca-Cola, KO. Also, I am long Blossom. I own those positions in my personal dividend stock portfolio. Before I go, in terms of full disclosure, I'm an affiliate of Blossom Social, and I'm compensated for signups to the app, although it's free to get started. In terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just sharing my personal journey for fun and entertainment. It's possible to lose money in the stock market. I just share my journey for fun and entertainment. Please consult your licensed financial advisor before making any financial decisions. I have all my disclosures and disclaimers, as always, in the description below. I can't wait to see you in the comments below. If you did enjoy the video today, it took a lot of time to film this one. I kind of had a few mess ups on my filming, and so please go ahead and click the like button, show me some love. It means the world to me. This one took a while, but I hope you all enjoy it. I enjoyed it. I enjoyed putting together this data. It's interesting to look at it, and please subscribe to my channel. I'll see you all. Also, check me out on all the social media platforms. I shared so many photos from the Blossom event on Instagram. That's a great place to follow me. I'll include a link in the pinned comment below. Also, my Facebook group, I just approved like over 1,000 new members to it, so I'm kind of back on point on that as well. Thank you for your patience if you were waiting to be admitted to that. Everyone, I appreciate all of you. Thank you so much for watching. I'll see you in the next dividend stock investing video.